Hi, welcome to this video day, Tuesday 16th of January, 3 p.m. GMT. We're going to be looking at three high odds trade setups in our view. They all include the yen. Now, we're very bullish of the yen. We think it's going up. Now, in terms of the pairs we're going to be looking at today, they're going to be CAD JPY, Euro JPY and GBP JPY. Incidentally, I did look at AUD JPY at the weekend. Those views still remain valid. I'm not going to look at USD JPY today. Why? Because our view hasn't changed from when we did our videos a little while ago. We thought it was a sell into 113 and it would go significantly lower. It's moved down a few hundred pips and I think it's got further to go on the downside. But I think a bounce is coming in USD JPY, so that makes the crosses more attractive from a risk-reward point of view at current levels. I will cover USD JPY if it does bounce for new positions getting in on the trade, okay? Or if you wish, you can join our member centre, get live access beneath this video and track our daily analysis of the pair. Now, in terms of Euro JPY, CAD JPY, I did a video on them last week with suggested entries. The Euro promptly dropped 250 odd pips and the CAD nearly 200 pips. Now, in terms of Euro JPY, it just bounced straight back. And just want to go through managing that sort of situation because no one likes to give back open profit, okay? CAD JPY, we haven't seen too much motion in the last few days. It's trading sideways at the moment. It still looks pretty weak to us. Now, I want to cover the CAD JPY first. Why? Because tomorrow we got the Bank of Canada and we can basically expect a big reaction either way. Now, will the CAD have a rally, a short covering rally, or will the JPY continue to push it down? Right, I'll give you my view now. Let's start with CAD JPY, then we're going to do Euro JPY and finish up with GBP JPY. Right, let's go to the charts.
We are on the chart of CAD JPY. Just for I draw my levels of entry, stop, and target. Just want to go through the COT net traders positions, which are in the top left-hand corner. If you're new to our videos, you don't know what they are simply the most valuable tool in terms of judging sentiment behind the chart and what the big players in the market are doing. Now, if you want to learn more about the tool, just simply click on the link beneath this video. If you just want to watch through right now, just keep in mind what we want to do is look at the two groups here, speculators and commercials, when they diverge significantly against each other in terms of their positions. We normally want to trade with the smart money commercials who are hedgers, okay? So what do we got? Speculators, 5.8 to 1 in terms of longs over shorts. So they're pretty bullish, okay? Commercials, 7.3 to 1 in terms of shorts over longs, so very bearish. Divergence between the groups is 13.1. Regular viewers, again, will know we like divergences above 10 because that normally indicates a move in favour of the commercials, okay? So specs very bullish, commercials very bearish. And we got a big news event tomorrow, which is the Bank of Canada. Now, in terms of the Bank of Canada, but taking a contrary view, okay? Now, in terms of what I mean by this, the market is discounting an 80% chance of a rate hike, okay? So you could say that is, basically the consensus view. It's in the price. But it's not a done deal if you look at what the Bank of Canada have been saying. They actually have said they're focused on quarterly data. The market is thinking they're going to hike rates on just a really good unemployment report. That's not what the Bank of Canada have said. They want to see things on a quarterly basis. And the quarter ends for them in March, not now, okay? Also got NAFTA trade talks. That's creating uncertainty for Canada. Bank of Canada are mindful of this, and the Bank of Canada have actually already indicated they think the US are going to withdraw. So are they going to hike rates? Well, if they do, they do. I mean, it's expected. If they don't, the reaction the other way should be pretty good. Okay, right, now let's go to the chart and look at some levels. Now, in terms of our first video, and this is where the net traders are so valuable, this spike up here to a new high, then you get this indecision candle here. The buying's exhausted, okay? Because this spike here, no more buyers, two bodies settled back. That's a half-hearted attempt to get higher. So we're just saying sell through this low and down she tumbles, okay? And yeah, when we did that, we had the COT net traders in mind. They were last week, I think, 14.5. So, you know, you've got the odds on your side if you do that. And you can see that it's a good fall, you know, from, yeah, we took it 90.65, 89.15, okay? So decent amount of pips on the downside. Now, what I'm probably going to do is take my trade out before the Bank of Canada because we've steadied up a bit, okay? Now, what you'll notice is the big fall. And we go through the 20-day moving average. Now we're poking back to it, okay? It should hold, okay? There's no guarantee, of course, but once you've broken the 20-day moving average and you've had a strong trend up, if you're a bear, then you think it's going to hold. And we're definitely bears, okay? Now, how would you play it? Well, my own views, coming in fresh, kind of poke to the 20 and come off it, all right? And this big red candle here is the one I would come through. Or, yeah, obviously you'll see what's happening tomorrow. But you want to sell weakness, okay? Get an order to take advantage of what the market is not expecting. Now, if we do not get a rate hike, I'd expect us to just go down, okay? And my first target would be here, okay, which is 87. Where would you put your stop? My own view is you've got to be back from the 20-day moving average, and I'm going to say these candles here will probably do it. So about 89, 60 or 70, something like that. I have to see where we are tomorrow, but yeah, obviously the chart can change, but you want to get your order in to take advantage of the unexpected, basically. So just if we take this here, we've got a risk reward of over 2 to 1. And I think this is going to be hit pretty quickly if the Bank of Canada don't hike rates. I'm actually looking, I'm going to slice through my text or underneath it, for a move all the way down to here longer term. Yeah, at the end of the day, I think, we're looking at the Bank of Canada here and we're looking at the Canadian dollar fundamentals. Obviously, there's two sides to a pair. Japanese yen. If we look at the fundamentals for Japan, out and out bullish at the moment. The economy is doing well. They will probably be reducing stimulus soon. We've got the potential for a move to risk off. So I think it's a good trade. Just trade what the market isn't expecting. Of course, if they do hike rates and you do get a rally, you're not going to get triggered, are you? I also think if there is a rally, then it'll just be a selling opportunity, okay? Because it's largely expected. I can't imagine a huge amount of buying coming in on what is expected. We shall have to see. But I think it's a good contrary trade. It's worked for us nicely. The last entry level we did, I'm hoping that tomorrow we get another good entry level. But we'll have to see. Right, let's move to the next chart, and that's going to be a Euro JPY. Euro JPY daily. It's been a choppy, messy chart if you look at it from a technical perspective. When you use the COT, you see the chart in a different way. And in terms of the way I'm seeing this chart, it's for a big move down. I'll draw my levels in a moment. I'm just going to go through the logic of the trade. Now, COT net traders first. Speculators 6.8 to 1 in terms of longs over shorts are very bullish. Commercials 7.2 to 1 in terms of shorts over longs, so very bearish. Divergence 14.4, close to a 5-year extreme. Now, in terms of when it was at a 5-year extreme, we were up here, okay? And we track this pair daily in the member centre. I'm saying this candle here is significant. She pushes up into clear blue sky on the chart. No more buyers. Slumps back. But she's holding the round number. So we're saying, just come in and let the round number get cleared through, so through 136. Sorry, not 136, 135.17, see if she runs. Well, she does run down. When I did my video, we were already down here, so it's saying sell any weakness. That's about 135.30 down to 133, or close to 133. So again, a decent profit. Yeah, we've got well over 250 pips in profit. What are we going to do now? Yeah, a lot of traders will want to move their stops really, really close. On this trade, we can't do that, or we could if we wanted to, but we're looking for it to run, 500 pips or more to the downside. Now, we've got to keep our stop back. So, we don't want to give back profit, and obviously that is going to mean we give back profit. One thing I would say, I know I say it in a lot of my videos, it's a fantastic technique in my view to help you stay with big trades and protect your equities. Just take half, okay, at a certain level. My level is always, if it's 150 pips or 200 pips, it'll depend on the pair. If I've got that, okay, I'll take half in, put a stop on the other half, okay. So if you take in over 250 pips, even if you put your stop at entry on the second position, you've still got 125 pips profit. What we did, we took half and we came out with a minor profit on the second position. I think it was about 80 pips odd, or 85, something like that. So we still got a very decent profit on both trades. It's frustrating, okay, because obviously we don't know what's going to happen, and I never expected that bounce. I mean, you always expect the unexpected in Forex trading, but I thought the chances of a big bounce once she broke down were, let's say, minimal. But of course, markets do the unexpected. But in terms of this price action, big blue, this blue's significant for me, settles back, can't take out 3 bodies. This red one does get up to the bodies above the blue one, but it slumps back again. So for us, 136 now is good resistance. Okay, sorry, I'm going a line straight. Never can do it. There we go. Also, just quickly, I want to discuss this move up here, this bounce back. What caused it? I was reading the media. I put the news over here on the left. They say, yes, do the ECB reducing stimulus more quickly than expected, which has been around for a while. It wasn't. There was no data really that pointed to that, but this big rally. Talk about Merkel forming a government, that was bullish for the euro. Well, it's just kind of the status quo, isn't it? Market was expecting that anyway. Does that really cause that spike? I think the spike was caused by what went on in the bond market, okay? And that's a one-off, so it isn't going to happen twice, okay? So I think that was the main cause. Regardless of my view of the news behind that spike, though, I think from a technical perspective, the important point is we've come up, the sentiment towards the euro has become even more bullish than when we were up here, and yet we can't get through. So I think the buying probably exhausted. Now, we slump back. Where would you want to come in the market? Well, basically, I would do this. Okay, so the bottom of that candle there, obviously, 20 days right on that line. That's the round number. Get the round number cleared. 134.80. See if she runs. Now, obvious technical support is going to be here. I personally don't think it's going to hold. We'll have to see the trade as it develops. The COT is near a 5-year extreme. A lot of speculators could get run on stop. I don't see any more good news coming for the euro. I think it's mostly now in the price. I don't see another bond spike yield. Okay, so due to the extreme, I personally think this level here is on the cards, which is 131.30. I think we could get down there. Okay, so that is the initial target if we get triggered. Okay, where do you place your stop? Well back from this tail on the round number, I'd say 136.30 135, something like that should do it. Then see if she runs. You obviously got to manage the trade as it moves, but at the moment, if you look at the entry, stop and target, it's about 3-1 in terms of risk reward. Obviously, the target has got to be hit. Decent risk to reward trade, but longer term, I am looking, because the euro is just so overbought, for a move down to 128.50. That's longer term. This is obviously the first target we're going to manage into this level, but I think this time round we will see the euro possibly finally really break to the downside. I must admit, I thought we caught it well on that one. I thought the run-on was coming. Markets are markets. It didn't give us what we wanted. It gave us some profit. This time round, I'm hoping it's going to give us what we want, and the market's going to be kind to us. We shall see, but I think it's a decent risk-reward trade. Right, let's move to our last pair, which is going to be GBP. GBP, JPY daily. Let's have a look at the COT net traders. Speculators 5.8-1. Terms longs over shorts, bullish. Commercials 7-1 in terms of shorts over longs, so pretty bearish. Divergence 12.8. It's not as big as the one we saw in Euro JPY, but it's a big one historically in this pair. Commercials have tended to favour the long side of the pound since Brexit in recent weeks. On a few pairs, including this one, they've started to be bearish of the pound, and I think it is going to come down. And in terms of just what I want to note very quickly before we draw some levels, it's a sympathy move with the euro. When we came down and we come back up, that's a sympathy move with the euro. Okay, it's a big blue candle here. No real data of significance out of the UK whatsoever. Now, if you look at the fundamentals of the British pound, consumer spending slowing up dramatically, borrowing lowest level since 2015 mid, debt levels are huge, consumers running out of money. Consumers powered the UK economy last year into the back end. It's now not got the buying power to do it. Okay, so that's going to be show up in the data in terms of consumption. Also, inflation data, that wasn't in line with forecasts recently. There's going to be no rate hike from the Bank of England. They don't mind a little bit of inflation at the moment, provided it doesn't run out of control. It isn't. They got the consumer in mind. Brexit negotiations, everyone thinks it's going to be a good conclusion. We shall see, but that's in the price. So any more good news for the pound? I personally don't think so. And what I like about this setup is you got basically two candles here that test the round number 152, and you've got a moving average 20 sitting on the round number as well. So that's the level that needs to give way to confirm the pound is coming down. So if we draw a trajectory line there, we've then got a double bottom, a 20-day moving average, and a round number. So come through here, 151.70. I think that would be a good level to come in through. What about stop protection? Just want to, sorry if I can get my, I think, what we did, obviously, we had a double top here, and then it gives way, or triple top, it gives way briefly above, down, come back up to test, through, but no close above. So my own view is bank behind this tail now. I think the level is 153.35. I think the top is 153.15, if I remember correctly. But anyway, well back from that tail, okay? Then she breaks through, watch for her to run. Now, where do I think she's going to go? Not to here. Well, I don't think this level is going to hold. I mean, of course it could, but for me, basically, a lot of speculators again to be hit on stop. 150, another technical level. Again, have to see how it goes. I don't think so. I would aim for the major support, which is 148. Okay, that obviously gives a very good risk reward trade if it comes off. Even if you get to 150, it's a decent risk reward. I just think that the pound moved in sympathy with the euro. The bullish news has run out for it. Japanese yen fundamentals out and out bullish, looking for a really good move down. Obviously, this is a highly volatile pair. I've said it will move in sympathy with the euro, so which do I think is the better pair? Euro JPY or GBP JPY? I can't decide actually. My own view is when you've got a currency you're really bullish of, the yen, like the yen, sorry, and you've got two currencies that are correlated to pick from, you can't choose. Then basically just decide your risk and then just do a split trade. So do 50% in each. You won't get the best eventuality, but of course you won't get the worst eventuality either. Right, that is the video for today. We can see how these trades go. Thank you very much for watching me as usual. Take care and have a good day.